Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
We're going to talk about a couple of more exciting stocks for your consideration this time around with Steve Reitmeister. And oh, look, Dave Bartosiak is in the house right at the desk here. I haven't seen you here in a long time, Dave.
Back in the flesh.
Telling you, welcome back.
It's good to be back.
We'll get to you in a little bit, though. Steve, we're going to start with you.
Yeah.
You have Lear.
Yeah, so not the jet maker. This is auto parts. And I think that when you take a look here, I'm putting on the screen here the price and consensus chart. And what you see here is, the price is the black line going up over time. The green arrows is the earnings surprises, and this is 5 years without an earnings miss. I mean, that's impressive in of itself. And then each of these individual colored lines is the earnings estimates over time. So what you want to see is exactly what this stock is giving. The consistent year-over-year earnings growth, so each sequential line higher than the next, and the slope of the lines going higher, meaning that each time they have an earnings surprise, that the earnings estimates go higher, the analysts see more good things going ahead for them, and the estimates go up. Mm-hmm. This is the model of consistency. What's great about this story is not only is the American auto market looking terrific, but two of the large markets that have been kind of so-so are coming back around. The European market, because of the economy is turning around, as well as in South America, in particular in Brazil, because they've been kind of on a 2-year recession here. Mm-hmm. So the world market looks terrific. You got the model of consistency, and there's a reason why analysts have target prices as high as 180 for the stock. So that's why I like to get on board, because I think there's going to be little to worry about with this pick going forward.
Yeah, there's a lot of good news on this company coming off of the best year in its history.
Yes, absolutely.
All right, David, you have an interesting company here. This company provides commercial real estate financial services?
Yeah, so they do a lot of lending in the commercial real estate space and the multi-unit family buildings. Okay?
I see.
So really coming off of Election Day, we had the huge Trump rally, and a big chunk of that was financials. So the smaller financials too, also like regional banks and things of that nature. Mm-hmm. So overall, it's kind of a play on, you're betting that the Trump infrastructure plays go through, and that tax reform happens so that our domestic economy really starts rocking and rolling. So these are the guys that are going to benefit from that on the lending side. And I'm glad Steve went over the price and consensus chart, because he's making my job that much easier. I don't have to do too much explaining here looking at the chart. But there's something to point out here on shares of Walker and Dunlop, is that there's a period of change here where prior to 2014, you've got, really nasty sort of choppiness where these estimates are coming down and it's not so good. And then there's a clear-cut change where these EPS estimates sort of trough in 2014 and then have since gone higher and continued to go higher. And there's a huge jump right after their last earnings report, because they had a big-time uptick in revenue. Revenues were up 44% sort of year over year. So you got this huge growth story that just took place, which basically is confirming the suspicions that everyone had that, yes, this is going to benefit in the early stages of the Trump economy. So as long as this keeps on trucking, I think you gotta go with this Zacks rank #1 strong buy right now.
And I believe I read if the EPS story continues throughout this year, the stock is going to continue to make new highs?
Absolutely, you'd hope so, right? Because you have a couple of great things going for it. First, the EPS keeps on ticking higher, and then as long as they have they never really had these huge growth numbers year over year, so the PE hasn't inflated too much. So as long as the EPS story can kind of keep on being consistent, then you don't have to worry about any shocks to the valuation.
All right. Do either of you own these stocks?
I own Lear.
No Walker and Dunlop for me.
All right.
Except I do have it in Momentum Trader.
Oh, okay. Well, that's interesting. That's kind of an ownership thing. You manage it, right? Thank you both for that. Don't forget, you can find more stock information on our website, Zacks.com. So if you're not there already watching this video, get on over to the homepage. You can link to commentary. You can link to stock picks and stock picking strategies, not on these stocks alone, but on a lot of others as well. Zacks.com for your consideration. With Steve and Dave, I'm Terry Ruffalo.